Hey everyone, welcome to Breakout Wednesday. It is Wednesday, January the 8th, 2020. It's about 2 p.m. Perth time, 5 p.m. Sydney time on the Wednesday Arvo. Okay, now, first of all, Happy New Year's, and it's good to be back. Now, before I get started, remember guys, this is just really a video blog on how one trader sees the market. It's not financial advice. I'm not a registered financial advisor, and I have no desire to be. This is just really a blog on looking at what I do. And that's it. So now moving on, this is a chart of the NASDAQ. So the NASDAQ is in a range bull market. Okay, we go back to the All Ords in Australia, and the All Ords is just still range bound. And so there's been some good trades and some stocks which exploding in Australia. But I'll tell you what, there's a lot more stocks in America which are absolutely going for it than there are in Aussie. So I'm just going to run through a few things that I'm going to do a little different in 2020 and things I'm going to concentrate on, and then I'm going to just run through some stocks, but also run through some stocks during this process of goals for 2020. So first of all, predictions for 2020. I don't do predictions. I don't understand them. The whole point to me of investing and trading is having an open mind, not being too opinionated, and being flexible. Sometimes my opinion can change by the hour. So, I have no idea what's happening in 6 months' time for one stock or for anything for that matter. And so certainly no predictions. Now, next thing is I'm going to trade less. So I reviewed every single trade over the Christmas break that I made during 2019. And I think I just need to trade a little less with stocks. And I think probably most people, it is the case, concentrating on perfect setups and I'm going to trade, further upon on that is I'm going to trade mainly from weekly charts. The daily charts, there's a lot of noise, and the weekly charts is a lot cleaner, and you get a lot more explosive moves on weekly charts. Okay. So, the next thing I'm doing is I'm going to go where the trends are, okay? And so following from the last point, I want to cut down on the number of stock trades because I do a lot of other trading, right? I trade a few futures contracts, and I'm quite busy with that stuff. And so I need to free up a bit of time, but I am going to go where the trends are. So that's why I'm mainly trading the NASDAQ market, because there's a lot more trends here at the moment, and if that changes, I will go elsewhere. Okay, so now the other thing I'm going to do is I'm going to stick with expensive stocks. All right, so I did so many trades last year, and to be ruthless with the reviewing process, I did well with the expensive stocks, okay, with the leading companies on the market, and I did okay with the penny dreadfuls, but I'll tell you what, my success rate is a hell of a lot higher with these expensive quality companies. And so I'm just going to do that. I'm just going to scrap the penny dreadfuls. I don't need them in my life. You never say never. If I see the totally awesome setup, I'll take it. But as a general rule, I'm going to focus on high growth, fast moving, expensive companies. And if people tell you you're not going to make the same returns on big companies, I beg to differ. I wholeheartedly disagree with that. You can enter these big stocks sometimes on leverage if you want, but you can enter with pretty tight stop losses, and you can risk the risk to reward on these more expensive companies is very, very attractive. Okay, and so for runaway bull markets, if you just look what things like Shopify and Apple have done last year, it's nuts. And I'm going to focus on these sort of things. Okay, so now another thing I'm going to do is I'm going to load up on sell-off. So if we have a market correction of 15, 20, 25% this year, there are a few ETFs and companies that I would want to get more of. CSL in Australia I want more of. There is an ETF in America called XAR, which won't show up on the Protrader charts. However, it is an ETF for aerospace and defense, and I've done a lot of research over Christmas on the aerospace and defense sector, and I like it, and I want to grab some of this ETF on a pretty violent pullback if it comes this year. Okay, but I'm going to be patient there. Okay, and if you look at that ETF, some of its main stocks, Lockheed Martin, I'm just going to go over a monthly chart on Lockheed Martin and just show, these, bear markets haven't really existed for a lot of these defense stocks. During the GFC, this stock went from $80 to $40 to 50% correction, which is nothing compared to a lot of the other companies. Like if you look at company I like, Macquarie, it went from 96 to 16 or $15, and so I'm keen on that XAR ETF if I can get it during a correction. The other one I want to get a bit more of is MOAT, which is just go to a weekly chart, which is an ETF listed on ASX. It looks at you guys can do your own research on that, but it looks at American companies. And okay, another thing I'm going to do is I'm going to, as I always do, but I'm going to follow sectors and I'm going to trade the strong sectors. So at the moment, software is strong, energy is strong, defense stocks are strong. I remember last year in August when all the gold stocks started rallying, and I pretty much, just piled into a bunch of different gold trades. And, I want to see stocks move in together, the group move in together. The probability of success is so much better when you have sector strength behind you. Okay, if you have one stock going up and the rest of the stocks in that sector going down, and you try and fight that trend and buy that one strong stock, the probability of success, I think, is probably well under 50% on that trade. So it's just not worth it as far as I'm concerned. Okay, so another thing I'm going to do, as always, is be ruthless with losers. So as soon as I'm in a momentum trade, as always, and it's not going well and I see red, I'm just going to cut it because I can always get back in. Okay, and another thing is I'm going to run through my watch list every single day. So let's just go, so I have a watch list here which just has all these different stocks in it, and there's probably really a few hundred in there. Okay, and I do scans every day, obviously, but I think it's also important to just run through this watch list every single day, just to you get to know the companies in there, you get to know how they're moving, and you see little things forming like inside bars and tight ranges, and it's just a healthy thing to do to get an eye on the market. And so I've been watching all these stocks in this watch list pretty much every day for years and years and years now, and when something happens with them that I've seen before, then I can pick it up, but I'm also going to do my scans, which I've talked about on a daily basis. However, I just think I need to be a little more diligent in running through that watch list every single night, and not just once or twice a week, because you do miss things, and that can cost you some cash, right? The other thing I'm doing is relative strength. So I'm going to, what I mean by relative strength, I don't mean this stupid indicator here, the RSI thing. I definitely don't mean that. I mean relative strength in terms of one stock compared to another stock, or you can really compare it to anything. But for example, TWLO the other day, the market was having a down day. I believe it was on this day, when was that? Yeah, the 3rd of Jan. I think the market was having a down day that day, and TWLO just didn't want to go down. It gapped a tiny bit down, went up, pretty much no sell-in, and it was showing relative strength to the market that day. Okay, and then it's had this breakout, and I have a position in that. Another stock which I have been looking at, COUP. It's a big software company, and this is showing incredible relative strength to all other software stocks, and the software sector is picking up at the moment, and this is definitely the lead in software stock in a strong sector right now. So that's, I have a position in this guy, and it's a pretty new position just from 3 days ago, and this is where it's the sort of stock where I want my money to be. I think hopefully I've identified here the strongest stock in the strongest sector, and I'm going to try and ride COUP as high as possible. And obviously the other thing I'm going to keep working on is tight bases. Okay, so I entered this thing today, PPH in Australia. This gave a little signal back here when it broke out on the 26th of November from this tight range. It's given a very similar range. Okay, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about 15 days, which is kind of nice. Obviously I'm looking at a daily chart there, but when we flick to a weekly, it's a decent setup. It's be good if it was a bit longer, obviously, but it's, I like this tight range, and I guess when I'm going to trade from a daily chart, I really want a really tight sideways range like that, and then a breakout. Okay, the volume wasn't great on breakout, to be honest, but it's that time of year, volume's down a little bit. Well, the financial community kind of on holidays till around the 15th of Jan, so I'm going to give it a bit of leeway on the volume front until then. Okay, so that's about it in terms of things I'm going to do differently this year. Okay, I'm going to keep my 200-day moving average rule, most of the time, unless the setup is really, really good on a weekly chart. So for if you look at TWLO, it's below its 200-day moving average, which is a worry for me. However, I just like the look of this on the weekly chart. And this was one of the big leading software stocks, and all the software stocks seem to be perking up at the moment. All right, if we look at the software, cybersecurity ETF, it's still above all its key moving averages, and it's been gapping up. And so anyway, I've broken that 200-day rule with TWLO, but as a general rule, that 200-day moving average rule has saved my ass a fair bit. All right, so moving on to a bunch of stocks. So let's just start with the Aussie ones. I'm watching HIL, HIL. It's a information technology company. If we look at it on a weekly chart, we've had this huge sideways basing period here. We've had massive volume on the expansion up here, and now we've got sideways movement on much lower volume. Okay, and so it nearly broke out yesterday. It didn't, and I just want to see this thing cruise sideways if possible, and then break out on this weekly chart, and hopefully we'll have a bit of a move higher. So that's what I'm watching. The next one, right, PPA, should have talked about that, but yeah, okay, so I've got a trade going there. RGO, whoops. Yeah, okay, I didn't expect RGO to break out today. It's been basing for a while now, and then it's broken up, and so anyway, I'm a day late with that for this talk. Apologies, everyone, but it broke up on some good news today, and it's certainly one I'm going to watch. There's a decent sideways basing pattern here. We have big volume on the breakout, so we might get a pullback towards this resistance line. I'm not sure, but it's certainly a stock which I'd like to be in if possible. So another thing, retail is pretty good. If we just flick to the reject shop, it's had a pretty nice move. Had an awful day today, actually, but and then if we look at obviously Kogan, it's in the same industries, basing up here at near new highs, and so I'm watching that, and there's a good chance this thing's just going to break down, but if it can just continue in this base and just tighten up there, then I'll probably play the breakout trade on Kogan. Another thing I'm looking at is a lot of these lithium stocks are starting to perk up a little bit. ORE has broken up above resistance, and it's perking. It's getting its head above all the key moving averages, and it did it on big volume too. And I'm thinking maybe this is the first sign of trend reversals in this stock, and I'm watching this one pretty closely. Okay, it needs to hold for me. It needs to hold this resistance turn support line, and if it can hold that and form a constructive base and just stay above that 200 moving average, then potentially I will, I'm pretty interested in that one. Another one which we've been talking about for ages, which I'm just stalking, is SEI. Let's just go to the weekly chart. Okay, I mean, it's just weekly chart, so clean, so clear, so obvious, maybe even too obvious, which is a bit of a worry. It's a penny dreadful stock, which not ideal, but if I'm going to break my, if I'm going to trade penny dreadfuls, it's going to be on a setup like that, right? It's not going to be on, some tiny little crappy setup on a in a 30-minute chart. It's going to be, something like that. So another one I'm keeping an eye on, let's just keep it on a weekly chart, is TWLO. This thing is basing. I think most people are falling asleep with this stock and are probably losing faith because it's just basing sideways. But if this thing, if this bases, it doesn't matter how long this bases for. If it bases for another year, that's awesome, right? I'm not in any rush to enter that, but if it can just base sideways and then finally break up, that could be a good trade. And forgive me for this, but I'm just keeping an eye on the banks. All right, Westpac's down there, making double bottom there. If it can show some signs of sideways action and breaking up out of this range, then I'm probably not going to trade that. But I definitely am not as bearish on banks as the rest of the world seems to be. All right, and so moving on to America. There's so many setups in the States. I'm not going to run through the trades I'm in because a lot of them are the same as the ones I talked about in December. But AEIS is setting up as an expensive energy stock, also good fundamentals behind it, blah blah blah. But it's setting up, and I found that in the Davis box scan. Okay, COUP I've already chatted about. MASI, Basin, enough said. Nevada, in a strong sector, in a huge uptrend, and it's given us a short-term Davis box. And TWLO, I believe I already talked about TWLO. Okay, so that's it. Welcome back to the year. Next week's talk, I have to be somewhere Wednesday, unfortunately, for family reasons. So I'm probably going to bring it out early next week, probably maybe Monday, Breakout Monday. All right, and I'm just going to leave you with the chart. I remember 6 months ago when everyone was backing out Tesla, and they thought it was over and Musk wasn't going to be able to raise his capital and that sort of stuff. And it just goes to show, guys, good products and amazing people behind the company is a real thing. And I'm a huge fan of Elon Musk, and I hope Tesla succeeds. Amazing company, amazing products, and an amazing founder behind it all. Take care.